Crypto rocketed to 12-month highs in April, but Bitcoin and ETH have come back down to earth this week. What's the real driver for Bitcoin price movement these days? Is it greed or is it fear? My guest today is Anthony Georgiades, co-founder of Pastel Network and general partner at Innovating Capital. And he has some interesting theories about Bitcoin's maturation as an asset and how that could impact prices. Anthony, welcome to Kitco News.
Great to be here. Thanks for having me.
Great to have you. So let's focus on Bitcoin. We saw a sharp rally over the last month. Bitcoin was trading around 27,000 on March 27th, went all the way up to 31,005 on April 14th. ETH was also seeing its post-Chapella rally above 2,100, where we were hearing predictions of a new crypto bull market. Everything was looking great. Now we're right back where we were a month ago with Bitcoin around 27,300. First, looking at the rally, what was driving Bitcoin higher during April?
Well, the breakout really started after the banking issues began to unfold. And it was quite fascinating. It's kind of really a couple of paradoxical factors that represent both the past, in which Bitcoin's value has been largely speculative in demand, and the future, in which Bitcoin started to really step into its role as that safe haven asset. So, in one instance, right, we saw this sort of de-dollarization, consumers, institutions, investors losing trust in the dollar in traditional financial institutions and seeking alternative safe haven assets like Bitcoin to really kind of serve as this hedge against instability, to serve against the potential risk of a collapse in the established financial system. On the flip side, you also saw basically some speculative driven nature. You had the Fed's overall lending program to the banks, which reversed a lot of the quantitative tightening that the Fed had put into place to really curb inflation. We also saw some somewhat inflationary indicators that might have pointed to a more dovish Fed. So you really had a little bit of driven demand from both functions. And I think what we've seen since then is a little bit of a kind of, sell the news sort of event. And from now, right, we're still seeing inflation as being sticky. The Fed is continuing to remain hawkish in its policy. And we're yet to really see a lot of the weight of the interest rate policies continue to take hold in the broader economy. So I think kind of this sort of sell-off recently has been almost a realization that, look, we're not out of the woods here yet. And Bitcoin is still responding to that kind of risk-on nature that it's been born out of and has really behaved like for the last decade plus.
Right. So you're saying the rally was it driven more by this fear of inflation being sticky, inflation remaining high, or was it driven by people looking for a speculative asset that might benefit from a time of uncertainty in the banking system? Which was more responsible for this run up above 31,000?
Yeah. I mean, look, it's the thing is, in terms of how you actually weight the run up itself, right? Your guess is as good as mine, but generally speaking, I think what's more interesting is that it was a lot of both of those factors at once. Institutions, for example, an institutional interest in Bitcoin. And, if you look at basically the height of 2021 and the height of the market, you didn't necessarily see institutions diving into Bitcoin as a speculative asset. You have seen that over the last few weeks, and you're continuing to see that. So there was that institutional interest in acquiring Bitcoin and holding Bitcoin as a sort of safe haven hedge against the dollar, against the financial system, a decentralized currency that has a lot of idiosyncratic and strong characteristics as it pertains to both fixed supply, inflationary pressures, the inability to be manipulated by overall monetary policy printing and whatnot. On the flip side, there obviously was that continued excitement and speculative nature that continued to really push that run as it related to basically this idea that maybe we will have a little bit of easier money floating into the future here over the next couple of months. Maybe the Fed will reverse course faster, and we are going to basically see a rip up in terms of risk on assets. So I would say, to be frank, it's one of the more interesting rallies that I've seen to date.
Right. Well, let's look at that de-dollarization phenomenon a little bit. You've said that this de-dollarization is the de-dollarization that we're seeing across the macroeconomy internationally as well as in the United States is driving Bitcoin. What parts of de-dollarization are supportive of Bitcoin? It's not just inflation hedging, right? It's there's more going on there.
Absolutely. Bitcoin is, frankly speaking, becoming much more understandable. Volatility is understood, right? The inflationary components are understood. The characteristics of Bitcoin are understood, what it is and what it isn't. And in the case of Bitcoin, right, the ability to both self-custody, the ability to own an asset that isn't susceptible to monetary policy, whether you want to call it manipulation or functions that are driven by a variety of factors. Bitcoin just continues to exist on its own. It's, by the SEC standard, sufficiently decentralized. What's another asset that really owns that characteristic and trait, right? There's only going to ever be 21 million in existence. It's mathematical, right? It's, 2 + 2 = 4, right? There's only ever going to be 21 million Bitcoin in existence. Can't say the same for the dollar. You can't say the same for any other traditional currency that exists to date, even a lot of commodities, right? In terms of how mining is, a function of potential demand, right? So there are certain characteristics of Bitcoin that just don't exist in other assets. And that's becoming more understandable and that's becoming more accessible. And I think it really goes back to those kind of key aspects: fixed supply, self-custody.
Right. And consumers who are not consumers and investors who are not all in on crypto and are not early adopters or are not part of the crypto ecosystem are seeing this utility, this dual utility of Bitcoin. Bitcoin is not now just a speculative thing. Let's get excited about price movements. Bitcoin is now being seen as a tool, an alternative asset when other markets are distressed, and also potentially a hedge against inflation, somewhat like gold. So that's interesting. I find it very interesting, this idea that Bitcoin could be kind of growing up from being just a speculative asset to being actually treated as a safe haven asset by the broader market. Along those lines, I think we have a bit of an interesting test scenario coming up later this week. We'll have US Q1 GDP on Thursday and PCE on Friday. Of course, PCE, the Fed's preferred measure of inflation. So this is an interesting test of this theory of to what degree Bitcoin is going to react like a speculative investment and to what degree it may be treated as a safe haven. So Q4 GDP was 2.6%. Markets are expecting between 2 and maybe 2.3. What happens to Bitcoin if GDP surprises to the downside and it looks to be confirming recession fears?
There's a few things going on right now. And first, just in terms of those functions, is it risk on? Is it risk off? It's more convoluted than that. And it's a little bit, it's not so binary, right? If you look at third world economies and emerging markets, Bitcoin has behaved as a risk off safe haven asset. If you look at established economies, Bitcoin has behaved as a risk on asset. Bitcoin was born out of the great financial crisis to really be a pure risk off asset. Now we're moving to that point. We're not necessarily there yet. So when you're talking about the US key economic indicators, right? Bitcoin will likely react to indicators that positively support more easing and more speculative asset growth. In that case, if we do see inflation start to come down, right, or we see GDP growth coming in lower than expected, right, we will likely intuitively believe that the Fed's policies have been working and they might not need to hike as quick or as high, or they might not need to carry the accumulated weight of those rate increases as long as we initially thought. Hence, if those things happen, we'll probably see continued rally in all risk-on assets.
So in developed economies, when Bitcoin is acting as a risk-on asset, then good news, good economic news. What's good for the broader market is good for Bitcoin, essentially, is what you're saying. Whereas in environments that are going to respond more risk off, where Bitcoin is seen more as a hedge against inflation or the collapse of currencies altogether in some cases, then Bitcoin would be driven. So to what degree is it being driven by the risk on and the risk off market participants?
Mm-hmm. Well, look, right, if you look at the quantum of participants in emerging or developing economies, there is a high percent of individuals that acquire and own and hold Bitcoin. Now, in terms of the global economy, it's just a small fraction of the overall daily transaction volume, the daily turnover of Bitcoin itself. So while it's a high percent of individuals or users, or just people around the world that are acquiring and owning Bitcoin, it doesn't necessarily move the needle in terms of what an established economy like the US or Western Europe can. Just kind of one nuance to your point as well. I wouldn't necessarily say that good news is good news for Bitcoin. Bad economic data, bad GDP growth. Let's remember, right? The Fed rips rates up till they break something, right? That's partially the job, right? They effectively want more slack in the labor market. They want to curb inflation. They want to do all these things. So if we see that maybe GDP growth has tapered, and maybe we see higher than expected unemployment data, these seemingly bad indicators in a kind of interesting fashion are traditionally good for markets in a tightening policy.
Okay. And then just looking very briefly at the core PCE, the potential for that number to move Bitcoin. We're priced in at essentially holding at 4.6%. This is core PCE year over year. What if it were to come in significantly higher than that? Would that be, obviously that's bad for the economy, that's bad for the Fed's credibility. It means rates will be higher for longer. But what does that really drive a safe haven bid for Bitcoin?
In the immediate term and short term, it's likely bad for Bitcoin. That's still somewhat correlated to the risk on movement in the US, right? It's probably bad. The Fed's policy will continue to tighten. Over the near, medium, long term, higher than expected inflation is good for Bitcoin because it demonstrates that the Fed, with all of its arsenal, with all of its ammo at its disposal, is unable to curb and contain the same inflation that it also predicted was transitory not so long ago in November of 2021. So the inability for the actual controlment and containment of inflation, given everything that we've done since, call it late November of 2021, when we had a 180-degree reversal in overall Fed policy, over the medium or long term, will really start to subside across the markets. The Fed has been unable to really control and contain this thing, and we might need to start to look at other measures, other assets, other commodities to really serve as an idiosyncratic hedge against a lot of the inflation that we're seeing.
Right. Well, then I guess my final question would relate to regulatory uncertainty for crypto, or even regulatory hostility. We saw today Coinbase is suing the SEC. They want answers to the questions they, I think, asked over 9 months ago on which cryptos are securities, but more importantly, how does the SEC determine what each cryptocurrency is or isn't? And I'm wondering what the impact could be on Bitcoin. As if what you're saying is true and Bitcoin is kind of maturing into a true alternative, a true relatively stable, not to say not volatile, but relatively stable alternative to the US dollar, does that paradoxically hurt Bitcoin with regulators? The very fact that Bitcoin's stability, so a lot of the criticism for crypto is these cryptocurrencies are very speculative, they go up and down like crazy, unlimited supply, who's really controlling them? That's the argument against a lot of crypto. Could the relative strength, the limited supply, all the advantages that you list for Bitcoin, could that hurt Bitcoin with regulators as the US prepares for potential of a CBDC and as the US becomes more and more concerned with de-dollarization and the devaluation of the US dollar, or the loss of primacy of the US dollar internationally? Could that actually be hurting Bitcoin? Its strength, its stability, what it has going for it against other crypto is potentially more threatening to the US dollar. Is that actually the case?
Well, there's a lot to unpack though, right? On the regulatory side of things, the SEC, regulatory bodies have already come out and said that Bitcoin is sufficiently decentralized, right? So the direct impact of regulation is not necessarily as quote unquote tangible or harmful. The indirect impact of regulation, and it's really not necessarily regulation, it's the lack thereof. The inability for, let's say, there to be easy fiat on-ramping into the market, right? To acquire Bitcoin by opening up a Coinbase account and basically, depositing fiat currency to acquire it. The lack of domestic innovation tools, both off-chain and on-chain, whatever it might be. And the rest of the Web3 economy and market, decentralized finance, dApps that live on Ethereum, whatever it might be. I think the lack of regulation has really made it opaque and confusing. We've seen a lot of innovation move offshore. We've seen a lot of companies that have just decided, not to get up and running. Venture capitalists and investors who have decided not to fund the market because there's uncertainty. Now, the positive side of that is, just last week, McHenry sat down with Gensler and basically, explained some dismay and, why he believed that the SEC needed to be a lot more clear and concise. No more regulation by enforcement. No more submission of wells and notices to entities without first establishing the clear framework, right? There needs to be clear guidelines in front of the curve, right? We can't necessarily try to go and trap institutions and entities that have tried to abide by the rules in arrears. It's not fair, and it's actually resulted in more harm than good. If FTX, right, if we had clear regulation domestically, potentially FTX would have operated here onshore under the jurisdiction and under the regulation of US regulators to really protect and prevent what we saw happen last year, right? So I'd say overall that it's more the need for regulation than anything itself.
Right. Well, thank you. Thank you so much for taking the time to talk to us today, Anthony. It's a very interesting view on Bitcoin's relationship with the broader economy.
Absolutely. Thanks for having me.
You're watching Kitco News. I'm Ernest Hoffman. Don't forget to subscribe to our channel.